Investors returned to markets in an elevated mood after a long weekend. The US equity market opened at the highest level in 2 months. The US dollar slipped against a basket of 6 major currencies as traders are poised for riskier assets. Traders await a series of economic data from the United States later in the global trading day. Hopes for recovery in the global economy outweigh pessimism which comes from the conflict between the United States and China. On Tuesday, Wall Street opened with a sharp rally, with the benchmark indexes surging nearly 3%. Futures on the Dow Jones spiked 2.03% to trade at 24,918. The S&P 500 climbed 1.9% and settled up at 3,009.12. In case the index holds firmly above 3,000 points, investors will have a good reason to say that a 3-month correction is over. Otherwise, analysts warned that the S&P 500 could decline as low as support at 2,725 due to massive selling. The market is monitoring the news on healthcare in the hope that the coronavirus vaccine will be invented sooner than later. Traders are reacting to the news from Novavax, the US-based pharmaceutical company. On Monday, it reported on the first human trials of its vaccine. Growing appetite for risk prompted investors to sell the US currency. Its index shed 0.8% to the levels of last Thursday. The index opened the New York trade at near 99.06 and halted its decline later. At present, financial markets are cramped by 2 controversial news flows. On the one hand, experts agree on good prospects for global economic recovery. On the other hand, investors' confidence is dented by standoff between Washington and Beijing. So, investors are braced for unexpected moves from any party. Today, investors are alert to macroeconomic data from the United States, in particular a consumer confidence index from the Conference Board. The indicator's growth could have increased the odds of a rapid recovery in the US economy in the wake of the pandemic. In fact, the actual index undershot the expected score as it rose to 86.9 instead of the consensus of 87.9. The Canadian dollar is benefiting from temporary weakness of its American peer and a rally in the oil market. The USD pair lost over 1% from yesterday's closing price. The loonie approached the level of 1.38. Judging by its steady advance, the currency pair is likely to plunge below 1.38. Notably, the loonie remains resilient despite remarks from Bank of Canada's Governor Stephen Poloz. He said that the economy needs a considerable fiscal stimulus. Crude futures are trading higher. WTI futures gained almost 3% in the evening session, so contracts with the nearest expiration are trading at $34.22 a barrel. The price is trying to test the resistance level or an intraday high at $34.50. If the level is broken upwards, this would be a clear-cut bullish sign. Importantly, the breakout has to be sharp and supported by a large trade volume. The North American crude grade is now trading 45% lower than the level of the early year. Nevertheless, the market seems to be determined to offset losses as soon as possible. Meanwhile, bears are likely to lose the battle. Bears will be able to assert strength in case oil prices fall below $30 a barrel. That's all for today. We wish you profitable deals. See you on our channel tomorrow.